Good afternoon, folks. This is your general overview of the BC real estate housing market for January of 2026. Let's first talk a little bit about interest rates. So there's two different types of interest rates that we pay attention to. One is the Bank of Canada overnight lending rate, and the second one is the bond rate. There's so much emphasis put on that Bank of Canada rate when it comes out. There's a lot of lead up to it, and then it's announced, and I announce it as well on my social media platforms. However, that interest rate only reflects in the variable rates. It really doesn't have anything to do with the closed rates. So the overnight lending rate from the Bank of Canada has stayed at 2.25% for, I forget what it is, last 6 months now. And it's probably going to stay there for a little while because inflation, the Bank of Canada's intention is to keep inflation down around that 2%. And it is down around that 2%. The other rate is called the bond rate. And the bond rate is what the closed mortgage rate. So when you're looking at a 3-year mortgage rate or a 5-year mortgage rate or a 10-year mortgage rate, those rates are based on the bond rate. The bond rate was inching down just like the Bank of Canada rate was last year. There's been some fluctuations up in the last couple of months in the bond rate. So you may see closed mortgage rates of 3% or 5% inch up in the next couple of months, but not by much. Not by much. I think you're going to see a fairly consistent mortgage view or mortgage package with all rates considered in 2026, just fairly flat. The government's pretty comfortable with the rate being at the inflation rate being at 2%. And so they're just going to maintain things, I think. And so that's something that's it's not really going to improve consumer confidence, but at least it's going to maintain it. The next thing is what's affecting the two major economies in the country, Toronto and Vancouver, and that is the foreign buyers ban. When you think about immigration or population increase in general, 70% of it in Canada, on average, comes from immigration. So the foreign buyers ban takes that immigration away. What are the two areas in the country that are affected most by immigration, mainly from mainland China and India? And that is Toronto and Vancouver. So that's why you're seeing these two incredible powerhouses of markets actually showing some depreciation, some weakening, and it's going to stay that way. It's as we outlined in the Lower Mainland, the Vancouver board and the Fraser Valley board, you got absorption down around 6%, lowest it's ever been. And you're going to see those markets stay that way until at least the anticipation of them taking away the foreign buyers ban starts to come into consumer confidence. I don't personally think they're going to take it away. I think they're going to modify it. There's a lot of talk right now of people sending their kids from mainland China and India into Canadian universities. They can't buy housing for them, which is difficult if the government wants people, foreign people coming into the country to send their kids to university, but they can't live anywhere. So that's the next point. The next point is there's a difference in the two markets in British Columbia. There's quite a difference. The Lower Mainland is doing quite poorly. Again, their absorption is 6%, which is very, very low. Normally, their absorption is much higher than the interior. The better the economy, the stronger the economy, the better it does overall compared to a different area. However, the interior has been relatively balanced and flat in 2025. There was a certain correction in the last half of 2023, right into the last half of 2024. But relatively balanced, and January shows a little bit of a downturn, but that is January is traditionally low because we're looking at December sales. So that is if you speculate as to what you're going to see in 2026, I think that it's a good possibility it's going to be flat as a pancake. I don't think you'll see any other markets turning down more, but you might see some of the markets in the interior of British Columbia and even the Lower Mainland inching up a bit as consumer confidence starts to come in. what's going on to the States, people get bored after a while with negativity. The negativity of a trade war, people are starting to get bored with it. You may see a couple of interest rates or an interest rate drop in that Bank of Canada rate or the bond rate. I think you're going to see a very slight increase in the markets across British Columbia and likely across the country in 2026. That's your housing market review for January of 2026.